Hello, financial investors, and welcome to the channel. My name is Brent, and today we are going to be doing our Monday buys video here for the 9th of March 2020. The stock market right now, stock futures are looking very negative. We'll go into some of the articles and information that is out there going into Monday, and then I am planning on buying one stock. I do plan on buying a little bit more in my other own Roth IRA. I'm planning on averaging down on SPLV, but I won't be doing any of that in today's video. We'll maybe discuss that on another video and kind of showcase that. But in today's video, we'll be just going into my wife's Roth IRA, doing our $115.38 deposit, and investing that towards one REIT, which I'm planning to buy. So let's go over a little bit of what's been going on this weekend. And if you are brand new to the channel, I would really appreciate if you do hit that subscribe button below. If you have any comments or questions, drop them. Drop them. I do read and reply to all of them. I know it could be a little scary to see what is going on, but again, this is just volatility. And if you're starting investing right now with a few $100s, a few $1,000s, even tens and $20,000, what is taking place right now with the markets kind of tanking is just giving you that better opportunity here in the short term to invest for the long term. So think of it that way. And of course, give this video a thumbs up if you do enjoy the video, find it helpful and entertaining. So let's go ahead and get into what is going on right now. So overall, the market has been down roughly 8% as of the last 2 weeks. We had a bit of a recovery this last week, and now here over the weekend, the stock futures are down 5%. They were basically halted at 5%. S&P down. This is showing 4.9, 4.82, and 4.87. I expect Monday to be much bloodier than what it is being shown right now. If we scroll down here a tad, we'll see that we have some open markets. We have the England market right there. England down 8.64% and Germany down 7.06. We can see Japan and Hong Kong were down 4 and 5%. So we expect, or I'm expecting, the market here on Monday to be one of the bloodiest days out there in the market. And I think this is a really good buying opportunity. I'm not sure how much further we are going to be falling, but I am definitely going to be dollar cost averaging. I'm not going to be putting all my money into the market here tomorrow. I am going to be putting in $1,000 into my own Roth IRA and the $115.38 into my wife's Roth IRA. That still leaves us with another $5,000 or so between each account to invest for the remainder of 2020. And then beyond that, I'm not putting any more money into the market just because I only use the Roth IRAs. And I may end up using a health savings account, an HSA, over at Fidelity here in the future. But we'll kind of go into that in another video. So what's going on right now? Well, there was a meetup between a bunch of these nations, and oil suffered at the expense of them. There was, here if we kind of read through the article here at the very top, oil prices suffered an historical collapse overnight after Saudi Arabia shocked the market by launching a price war against a one-time ally, Russia. So U.S. oil prices crashed by almost 34% to a 4-year low to $27.34 a barrel as traders brace for Saudi Arabia to flood the market with crude oil in order to recapture the market share. So it's basically just an oil war, what is going on right there. So crude was recently trading down 27%. Oil has already been down 30% year to date. If we look at the oil ETF, ticker symbol USO, it's already down year to date 31.93 over year to date. Here going into the next week here, this next day, light crude is down 22.63% right now. It's priced at 31.92. So if we jump over here, this is not the correct ETF. I'm not sure what the ETF would be here, but we can expect to see USO down a very large amount here open on Monday. So I think it's very interesting. I don't know how it'll kind of play out, but all the big articles are kind of discussing the oil crashes, global stocks tumble as oil crashes are compounding over between what's going on overseas with Saudi Arabia and then the other fears that are out there in the market. So there's the current markets right now with the world markets. I think it'll be for an interesting day. I don't know anything else beyond that. I know I've posted a couple articles over on my Facebook page. Monday will be a rough start here. This is kind of posted earlier in the day, 8 hours ago. Dow is down over 1,000 points, and it basically got halted. They have halts every 5 to 7%. So if it just drops off 5 or 7%, the it'll stop trading. So that is what took place. It just stopped happening, and tomorrow it'll more than likely continue falling into the red. So we'll kind of see how this plays out. I see a lot of investors down here got some money to deploy. Any oil ETFs you'd recommend? USO is probably the only oil ETF that I track myself. I know a lot of other investors have also been invested into ETFs that go into oil as well. And yeah, Monday is definitely going to be crazy. So here we are talking about stock futures fell fast enough to trigger a halt. So I thought this was another interesting article. It kind of goes over where the triggers are at. The S&P 500 has 3 circuit breakers which halt trading if it's a sell-off. The first one is down at 7%, and then once that trigger is hit, it basically halts the trading, and then it continues to kind of go down in little tiers. So overnight, Sunday night, the market declined by 5%. So the circuit breaker levels are at a threshold at which exchanges are halted or close market worldwide trading due to the extreme declines. These levels are calculated daily based on the previous day's close in the S&P 500. So, Monday, or was it? Friday, here. Friday, the market was already down roughly 2% there on Friday alone. And now here with stock futures down 5-6%, that just triggered that to halt it. So these articles are over on Facebook. If you're interested, I don't think you need to have a Facebook account. When I post it over on my discussion tab on YouTube, I noticed that a lot of viewers, subscribers did not have Facebook. So I will maybe end up posting these over to my YouTube discussion. Maybe I'll use that a little bit more. Maybe start posting across different social media platforms in order to kind of just disperse information. So there's some really good information here, and it just kind of talks about the different thresholds and how, what could take place here. We may not see a 20% drop off in a single day, obviously, because we have these triggers where a decline of 5%, a decline of 7%, a decline of 13%. So that's already 25% there. And then we have a 20% drop off. So we definitely have some big triggers to hit, and that would halt trading going into the day. So who knows what will take place? I think it's very interesting. This was another website I use, Energy Centric, in order to kind of gain some information as far as oils go. And it doesn't have anything for Saturday, so that's unfortunate, and I am still here. Okay, so there's only one ETF, or not ETF, there's only one stock I'm planning to buy within this account, and that is going to be Main Street Capital. The reason for this is that on last week, the portfolio itself was up 2.96% on the one day, while the rest of the market was down a good almost 2% here, besides the Dow down about 1%. The portfolio itself had actually done not too bad, down about 0.58%, basically being held up here by Walgreens, Kimberly-Clark, 3M, Avery Dennison, and some of my rates kind of kicking in. And some of the positions that were actually negative last week, if we scroll down here, we'll notice that Main Street Capital continued to fall just a little bit further last week, and will probably continue into falling here on Monday. And I want to build that position up a bit. I'm not sure. There's not a whole lot of other positions down here that I currently want to add equity into. I wouldn't mind adding more into Eaton Vance, but I believe with lowered rates, I'm going to be getting a better discount and buying opportunity into Eaton Vance, JP Morgan, Las Vegas Sands. These are all being affected right now by lowered rates or just issues with what's going out there in the economy. GPC is going to be hurt a little bit here in the short term. Retail is going to be hurt here in the short term. Caterpillar's not too bad. I may add more equity into that one in the future, but for the time being, it's currently fine. Lowe's, I could definitely add more into Lowe's in the future. Main Street Capital and Cisco. So really, out of all the positions that are here in the red, my main couple that I would actually try and target: Main Street Capital, Lowe's, potentially Cardinal Health and Caterpillar, and everything else depending on just the day. I am not too interested in just kind of averaging down on these. I would like to see this market right now, what is going on right now, take out some of these other positions, such as McDonald's. I would like to see McDonald's get hammered down back into the negative. I would like to see Avi get hammered down a bit more, Cisco get hammered down, Johnson and Johnson. Some of these stronger stocks. These are great. I'm going to continue to buy and hold them, but I'm going to continue to hold them. But I'm not going to be adding to these, especially such a Chevron right now. I think I'll probably wait a little bit on this one. Um, I think next week would be a really good opportunity to just see how this plays out here right now, and then buy more of Chevron. Right now, I don't have that much equity added into here. The cost right now is $530. I could probably toss another $500 at Chevron and get it up to a good sizable position. This would basically nullify half of my return or my loss. So basically, just double the position. It'll nullify half of the loss and just kind of average down by a good chunk. So I'll probably do that here in the future. But kind of going into the position that we're going to be buying is Main Street Capital, and I don't want to spend a whole lot of time going into this one. I think it's a good real estate investment trust. It is negative as far as if we take away the dividends. That's why I'm averaging into this one. I don't include the dividends as positive. So far I've had a positive return because of those dividends, but market gains wise, I'm just averaging down on this specific stock. So what we're going to be doing here is just targeting the full amount here, and this is going to be buying here on Monday $125.89 of this one. And order has been submitted, and that'll put me up quite a bit. So this one is worth right now, average share price is $37.58. It's trading at $36.90. So I'm just kind of averaging my position down a bit more. It does have a very nice starting yield of 6.67%. So that is basically all I wanted to cover in today's video. Just a very quick video going into my Monday buy and just kind of going over what is going on right now in the market. I'm not worried. It's a long-term investing is a long-term game, and what's going on in the market, it's going to subside in the future. There's going to be definitely some rockiness to it, and you don't want to think with your emotions. You don't want to get all flustered. It's temporary, and you're not going to just stop just investing just because a little bit of volatility. Eventually it will recover. Who knows how long it'll take to recover, but I don't need the capital that I'm investing in these Roth IRAs. That's a good thing about investing in Roth IRAs. I don't have to worry about that capital until 59 and a half. That's another 20 plus years for me. And by that time, this little day, this little blip in the week, the month, the year will just be another little blip. And then by the time I'm 60, I'll be getting thousands of dollars in dividends from this account that we're building up during this downturn. So that is going to be it for today's video. If you guys have enjoyed this video, definitely hit that subscribe button below. I do appreciate all the thumbs up I get in the videos. If you have not yet subscribed to the channel, definitely subscribe to the channel. Let me know in the comment section below, what do you think of what is going on right now? Are you a bit worried? Are you acting out with your emotions? Or are you kind of thinking of it long term, averaging down, buying some new positions, getting into it long? And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.